Titles podcast, and I am so pleased today to be up in Grafton, Wisconsin with my two friends, Mike Murphy, who is a regional sales manager, and Claudio Lanza, who is a loan originator with North Shore Bank. Welcome, guys. I know they have to read off their license number, so why don't we do that just so we're clean with legal.
My NMLS is 267487.
All right. And I'm Mike. My NMLS is 584693.
Excellent. Well, guys, thanks. I appreciate the time. I'm really excited about this conversation. From a land trust standpoint, we appreciate just any of the business that we've been able to do together and the customers that we've been able to mutually serve. But why don't we just talk first off just a little bit about you guys and how you guys got started. Why don't we start with Mike? Mike, how'd you get started in lending? And what did that journey look like?
Yeah, it's kind of in my blood. So when I was growing up, my dad was a successful real estate agent for quite a while. My mother was a very successful loan officer for quite a while.
Here in the area?
Here in the area, yep.
Okay.
Robodo Realtors. I don't know if anyone remembers that. That's been passed. That's where and my mother was a
Robodo.
Yeah, Robodo. My mother was a real estate agent there for a while there too until she got into lending. So kind of in my blood. When I got out of high school, I went into the military right away into the Air Force. Went to school there. And when I got out, was looking for a new career, and I knew it would be somewhere in real estate. I really enjoyed real estate. I grew up around it. I'm just not quite sure which way to go, but I've always had kind of an affinity for numbers. I really liked helping people, like figuring things out. Just things that help people get into their homes, and so went into mortgages 26 years ago.
Wow.
So yeah,
that's amazing. 26 years. So first off, you served in the Air Force. Are you excited about the new Top Gun movie? Or is it a lot? Is it too much hype?
I was in the Air Force for 8 years. Never saw the inside of a military plane. So I'm excited.
Any cool sunglasses at all? Or
yeah, no cool sunglasses, but I'm excited for it. It's a great franchise. It's a great movie. I love the first one. I think the second one will be fun. But
yeah, it's coming out this weekend.
Yep.
So, Mike, where'd you start with your lending, and what did that look like? So 26 years ago, that's in the 90s, right?
Yep.
Yeah. Okay.
Yeah.
And so you started, and then you were part of the Big Short era as well, weren't you?
Exactly. Yeah. So. I started at it's called Comcor. It's no longer in business. They were.
I remember Comcor.
Yeah, way back in the day. And then ultimately I went into wholesale lending. So I was a wholesale manager for Wisconsin for Chase for 13 years.
Okay.
And then that got shut down.
That's how we met.
Yep. Claudio.
No kidding.
Claudio was one of my best clients there. So we were doing actually wholesale subprime at the time.
No kidding. Okay.
Alt-A, actually, not subprime. We did not get into the. we were not part of the Big Short. So
yeah. So I was. By the way, I was a mortgage broker during the Big Short
Okay.
period of time, and I had my own title agency, which is how I got into title. And so I knew Tony Raya. I don't know if you know Tony Raya at all, but he was a wholesale lender in Chicago with Chase. Okay, so you've been through the ups, you've been through the downs.
Yep.
So if you would talk to someone who's getting started in sales, what were the things that were important to you to really get kicking?
Yeah, I think you got to get with a good organization. You got to get a mentor is a big thing, especially in mortgages, because there's a lot that goes into mortgages. A little bit different than there are a lot of sales jobs where you need a lot of knowledge and a lot of critical thinking and analysis and things, because every customer, every loan is a little bit different. So you definitely want to have a mentor that can help you out. You've got to be unafraid to go in to see people and talk to people, and you've got to be okay with rejection, and it's not going to happen overnight for you. So buckle in for the long haul, but it's definitely worth it. It's a great it's a great lifestyle once you get it, and
there's a lot of freedoms involved once you get past
Exactly.
the period of time where you're scratching and clawing for clients.
You got to dive in.
It's something different every day. It's an interesting thing every day long, and in this type of a sales job, the best part is it always ends with somebody happy. I mean, it's very rare that you don't have somebody that's either buying a house, which is always a reason to celebrate, upgrading or whatever it is, or even on a refinance. We're almost always there's always a reason to do it: saving money, consolidating debt, something you're making a meaningful impact on people's lives. Home improvement, you're making a meaningful impact on people's lives every single day. So it's just a great job, and you're selling something that everybody needs. you know.
Yeah,
And
that's-
selling's not the best word, but we can use it here.
Yeah, it's relationship and building, but eventually, you kind of refer to it as sales. So Claudio, so tell me, when did you begin?
Well, I used to work for a company called Lapin Electric. I was their corporate credit manager for many, many years. And I used to deal with builders. I was the person who okayed the shipment for large jobs. Back in the 90s, like my company got sold. I was out of a job. And everybody said, you should get into the mortgage business.
Okay.
It's basically the same thing. You look at credit reports, you look at the credit, company versus personal. And I started working for a company. I was there probably a year. I liked it. Had a lot of contacts. And in 1997, I started my own company called Mid-Continental Mortgage.
Mm-hmm.
That's where I met Mike.
Okay.
And I was
And
in
Mike
business-
you were selling to him?
Well,
Yeah,
Because you were a wholesaler,
I was
right?
also,
Yeah.
and I was in business for 13 years.
Wow.
And my first year, like Mike said, you can take no. I driving a Delta 88 Oldsmobile, and I was stopping and passing business cards to everybody. That's how I started it.
That was your prospecting.
This is my business card. Give me a shot.
Yeah.
Give me a call if you need me. And I was following up, and little by little, it grew up, and it shut down in 2010 because of the recession. And then I went to that was for a while U.S. Bank, Chase. Then I came here.
And how long have you been with North Shore?
4.5 years.
Okay, fantastic. And Mike, how long have you been here?
About 10 months.
Okay. So, guys, why did you pick North Shore Bank? Yeah, there's a lot of options to originate loans. There's, there are still some brokers still alive, right? Aren't they? Here and there. But why'd you pick a community bank? We're a community bank
Right.
here at North Shore, right? So why'd you pick North Shore?
I picked North Shore. One of the main reasons is I was not micromanaged, and also the family, the smaller. Everybody knows who is here. I can make a call instead of the Chase where the underwriting is done in
Different
Jacksonville,
states,
Florida,
yeah.
and then
So
it's
they don't
Phoenix
understand
and
they don't
Columbus.
understand the
Correct.
local people,
Correct.
right?
Yeah, and all of underwriting that was one of the big reasons the underwriting is done locally here.
Okay, great. And Mike, how about you?
Yeah, so my background is Chase, obviously, we talked about that. Then I ran PNC Mortgage for 7 years, and I went over to BMO as a market manager for them until they kind of closed up their way of doing business. So this is when I was looking for my next stop, because BMO had closed up. They no longer did retail business. So I was looking for a place, a local, smaller type of bank. And looked at North Shore. Frankly, Claudio was here, and he recommended it, so it's a good place to work, and I carried a lot of weight. So when I was looking around, I definitely, I came to North Shore. It's a little bit of a culture shock, but in a very good way. As Claudio had mentioned, the underwriting is local. People answer the phone. I'm picking up the phone, waiting to leave a message for an underwriter or somebody, and they're picking up the phone. I'm getting kind of thrown by that because I'm not used to it.
Yeah.
Things happen very, very quickly here. And something that's even more important now that I knew was important at the time, but it's even more important now is our product mix with our portfolio lending. Which you can talk a little more about that later if you want to. But
I do.
that is especially important now in this rising rate environment. And the options that we can provide for people, and it's proving to be just a great decision on my part, and I hope North Shore feels the same.
Yeah, that's great. So with North Shore, what's the strategy to get business? Are you mainly dealing with bank clients? What is it like being a loan officer for a community bank? Are you still out there building relationships with real estate brokers? What does a day look like for you guys?
Most of my business, 70% of my business is referral, past referral.
Okay.
I believe in you build foundations like a basement or a house, and then become pillars. They got to stay strong. But I like to move on and build new contacts constantly. But my game plan is all the time is hook up the real estate agent with the financial advisor, hook them up together like a chain, not keep them
So a little bit of a matchmaker.
Correct. Somebody who owns a company, maybe go in there and do a presentation for the employees. Is a matchmaker. It's a very good thing to put it together. A financial advisor, an attorney for them. I'm the maestro. I'm running the orchestra, but I conduct everybody's together looking at me for, hey, what do you think we should do? instead of keeping them separate, like, a real estate, financial advisor, try to put them all together.
So you're
in one.
collaborative, and so people, when
Correct.
people look to you, they go, "Oh,
Correct.
that's a guy that's going to connect me with people. If he has a meeting, if he has a session, if he has a mixer, I know I'm going to meet interesting people and
I
it's
want
going to
my
be fruitful."
contacts to mix themselves together.
Yeah.
Instead of, most people try to keep them separate. And we call them COIs. I wanted all the COIs to be together with one another.
What does COI stand for?
Customer of importance.
Customer of importance. I love it.
Circle of influence.
Yeah,
There's
circle of
there's a lot
influence. That's great.
Yeah, COIs, right?
Yeah.
A lot of different.
Excellent.
Right now I'm working on a gentleman that I went to school with. He's the director of a country club.
Okay.
So I want to get all of his employees together and maybe bring Mike in, or maybe a financial advisor, a real estate agent, and try to get him together with the employees for me to do a presentation.
Just adding value.
Correct.
Okay, fantastic. And what about you, Mike? Is there a different strategy that you have?
It's pretty much the same. Going out and seeing a realtor, letting them know what we have.
Yeah.
I picked this up from Claudio. When I use it now when I talk to new people, is make sure everybody knows what you do. And
Yeah.
I don't think a lot of people do that. And you've heard me say that on a number of calls. I'm sure it's like when you're sitting there at the game or whatever, you're with the other parents and things like that. You're not going to do a sales pitch or anything.
Right.
But you can work. This is what I do, or and
Sure.
make sure everybody knows. So we get a lot of business that way. But it's definitely being with a community bank. We stay involved in the community, chambers, events, charity events, things like that, which really goes a long way. Which is again another very good difference between us and the bigger banks that I'm used to. So.
Yeah, so I was really fascinated about North Shore Bank and just the story, which was they started in the back of a hardware store or something like that, right?
99 years ago.
99 years ago, yeah, that's something, and it built to this. So why don't we talk just a little bit about North Shore Bank? Who they are, how many locations they have, the kind of the people that you serve. And then we'll get into a little bit more questions about the portfolio loans and how you see the market.
Yeah. So we have 44 branches, mainly spanning from Door County all the way to the Illinois border.
Okay.
Pretty much right along the lakefront there.
And are you guys in Illinois too, like Waukegan, Gurnee area?
We have one branch in Illinois.
Okay.
And it's currently being rebranded as
McHenry,
North
right?
Shore Bank. Yeah,
Oh, it's McHenry? Okay,
It's
great.
not too far from you.
Yep.
Yeah, and it's being rebranded, I think, next month, I believe. Don't quote me on that, but
Okay.
as a North Shore Bank branch. So we do have the one in Illinois. So we have the 44 branches, and it's pretty much all along there. We service all of Wisconsin and Illinois. So.
And you guys, do you guys do commercial lending as well as residential lending?
Correct.
Yep.
Okay.
Yeah, we have we're a full service bank. We offer commercial, treasury management, all that stuff. So any type of service that you get from a big bank, we can provide here, but locally with people that are engaged in the community, people that have a stake in the community, and we've been here for 99 years. We're True Mutual. We're not owned by anybody. We don't have a board of directors. We don't have stock. We can't be bought. So we're going to be here for another 99 years as North Shore Bank. We just we're not publicly traded, so we're not going anywhere. Which, with the bank consolidation and all that stuff, that's a big deal.
Yeah, that is a big deal.
We do car loans also, boat loans,
Okay.
RVs, right?
We do a lot of RV. We do a lot of indirect
RVs,
RV
yeah.
loans.
Okay.
We're one of the biggest RV lenders in the state.
All right. So let's talk about the portfolio, the types of loans that you guys are able to do, and how you're maybe differentiating yourselves in the market today. How's that looking?
Okay.
What we do is a portfolio is we still follow the Freddie Mac guidelines, but we do deals that sometimes you look at assets, what kind of assets there, and it's case by case. And if I believe when I get a loan that it should be a portfolio loan, I'll probably call Mike and put it together with Mike. And we keep it in house. That's the nice thing about it.
And you service it yourself?
And we service it.
Okay, that's fantastic.
Yeah, it's kind of we kind of loosely follow the agency guidelines, the Freddie and Fannie guidelines, but it's kind of our money, our rules type of a thing. So if a deal makes sense, but it's not something that Fannie or Freddie will buy, we will look at that, and if it makes sense, we'll book that loan and get it for the customer. So we do a lot of portfolio lending. If they don't fit in the box, they don't check all the boxes that everyone's used to worrying about. We can in a lot of situations help them out in our own money. And with that being said, a lot of people think, okay, the rates are crazy on something like that but they really aren't. The rates are very, very competitive.
It's always an arm.
It's always an arm.
Yeah.
Okay.
Yeah.
And what is it? Is it a 2-year or 3-year?
5.
5? Okay, great.
Yeah, so we got 2 and 3 and 5 available.
Yeah.
Most of what we're doing is 5.
Most 5, yeah.
We talk about arms forever right now.
Yeah.
There's a lot, and that's
Is that really the strategy right now? Is because people have gotten because I mean, let's face it, rates are fantastic if you look at the last 30
20
years,
years.
yeah, whatever. But right now, when rates were in what was the lowest point? 3?
No, they're in the 2.
Oh,
Seven.
okay, 2.7.
And 20 years ago, it was 5%, 5.25%. What they are now, and back then, everybody
Yeah.
5%.
Yeah, exactly. So, but people are getting over that, and I think maybe it'll take a year or 18 months for people to
Correct.
get used to that these rates are good and great and whatnot. However, you're able to pivot and say, hey, listen, let's do a 5-year. Maybe it'll come back. If not, we can re-up on the 5-year, that kind of thing.
And we do a very good job here at evaluating the arms because, I mean, we haven't been in an ARM environment for a while.
Right.
And right now, what makes ARM so attractive is the spread between the fixed rate and the ARM. So back when rates were 3% and the ARM was 2.5%, it's not worth the risk. There's not really any benefit there for anybody. But now the spread between the fixed rate and the ARMs are 2.5% sometimes. So we do a very good job at running and evaluating each customer for an ARM versus a fixed rate. The ARMs, you'll find out, really come in tens of thousands within that 5-year period. You're tens of thousands of dollars ahead, both in equity and in saved payments. So we run those right down to the penny for everybody to let them know, as an option. If they, the fixed rates are still there, but we want to present that option in this environment. A lot of banks, not banks, a lot of mortgage lenders don't have portfolio or ARM options, which is another great reason to come to a place like North Shore. So we do give them all those options. We do run the numbers. We make sure everybody really understands what they're getting into, how to manage that ARM. And at some point they can refinance out of it if the rates come down. Kind of the point that Claudio was making, you made also with the rates. I hope it takes less than a year for people to settle in to either an ARM or something, because back in, I ran these numbers for a different reason, but they're still fresh in my head. Back in 1973, the rates were 8% rising, and the rates, so if people were talking about, hey, I'm going to wait, we hear this a lot right now, I'm going to wait for the rates to come back down, then I'm going to buy something. Well, rates never hit 8% until 1993. So we were, or 1992. So we were 19 years. So if you're waiting for that rate to get below 8%, you waited 19 years for you to get down to 8%.
Yeah.
1982, I think they were at like 14. Then in 1984, they went down to 10. So suddenly 10 looks really good, right?
Yeah.
So it's all relative. So to your point, the rates are really good right now historically. So when people are looking at it, they really got to have a little bit of a different mindset. If they don't, and if the rates are too high, then the ARM is a great option. We can show them how really even on a 5-year ARM, you've got about 9 years, typically 9 to 10 years before that ARM could even potentially cost you more money than a fixed rate. And we demonstrate that to everybody so they understand that.
That's great. And I think another factor today that maybe was different, back in the day is that after 5 years, people either want to get a bigger home, they're moving to a different location or whatever it is. So people are in their homes a lot shorter period of time. Is that
7
true?
years.
Yeah.
7 years.
7 years.
Yeah.
So
I read that in an article, 7 years.
yeah. So that's amazing, as opposed to you bought a home and you stayed in it for 30 years and you retired there, back.
Like our
but
parents did.
that's not that's not anymore. So that's another advantage to that.
Go
One
ahead. Thing that I want to add too is we also do construction.
Okay, fantastic.
Yeah, we do constructions, and one thing, like Mike said, right now we're hearing I'll buy a house when the market crashes, and what happened right now, what's happening right now is going to think nothing to do with what happened in 2008.
Yeah.
I heard that a couple of times. Well, I'm going to wait where the rates get lower, the price goes down. There's going to be some adjustment in pricing homes. I talked to a lot of real estate agents. It's not going to be that much.
No. Yeah, in some pocket areas that were super inflated, they might come down. Maybe, like, Florida or along the coast or whatever.
Are usually the ones.
Yeah, exactly. But I think you're right. I think appraisals right now have been kept in check, right? And that probably is the big reason why we're not going to see that run up because now if people want to overpay for a home, which some are, I don't want to say overpay, but if they want to bring, they have to bring cash. Yeah, they have to bring cash, and we're not going to finance the overpayment. Where before it was just finance me, and the appraisals were out of control. Would you see it that way too?
Yes.
Yeah.
And I had an open house a couple of weeks ago, and I told the gentleman there, I said, what's going on right now? It's not the same thing happened in 2008. That was Wall Street.
Yeah.
Banks,
Yeah.
Things were out of whack. Now things are
less
more
regulation from
Yes.
a mortgage brokerage
Right.
standpoint. You basically could be pumping gas one day and writing loans the next. Right. There's a whole nother process. We're reading off our loan licenses, so there's a licensing process for lending today. So there's a whole lot of checks and balances that were kind of put in that squeeze out some of that nefarious stuff that really dragged us down. Yeah. What's the advantage of doing business with a community bank as opposed to 1-800-ROCKET?
Well, we're definitely going to be here, so that's one of the things. We're not going to be bought, like I mentioned before. The other thing is in this environment right now, you're going to have actually in any environment, real estate transactions aren't perfect. Things happen during them that are unexpected, and you need to pivot a lot of times. You need to have somebody jump in and solve things. You don't want to be a couple days away from closing and have to rely on an 800 number and whoever answered that thing to solve your problem prior to the closing.
Yeah.
Here, you can walk in, you can sit, you can walk in
Sit
Claudio's
down with
office, sit down right with Claudio. If Claudio has a problem, he can call me, and I sit 30 feet away from the entire operations, underwriters, everybody else. If Claudio wanted to, he could go and talk to them directly. You don't get that kind of service with the 800 numbers with the remote lenders.
The big banks.
The big banks, yeah. And in fact, I mean, even with the big banks that have local representation, when I worked there, again, it's a different way of thinking for me, where very quick story, an appraisal was coming in late on a purchase. In my first week I was here and I was listening in on this conversation. Appraisal was coming in late on a purchase, and it was the seller's fault. They didn't cry. They didn't do some work that needed to be redone. So we had to have a appraiser go back out there and do that. So that was running late, but but everybody still wanted to close on time. And I'm thinking, well, we got to push this out for 2 weeks, because that's what I'm used to saying. Oh, you don't have the appraisal, push it out for 2 weeks. The comment was made on a call, look, we can get that appraisal in by before noon. We can close at 2 o'clock on the same day, which is just kind of unheard of. So that's really the benefit of having local type of process. We can move very, very quickly when we need to. We're a very flat organization. Decision makers are just 2 people away from, actually 1 person away from me, and the president of the bank is 3 people away from me. That's it. So I have access to the president of the bank if I need it. Claudio does as well. He can call anybody. We don't have, we don't adhere to a chain of command, for lack of a better word.
Yeah.
So if Claudio thinks that my boss can handle something quicker than I can, or whatever it is, there's no egos here. We're just getting it done as fast as we can, and that's not typical in bigger banks.
So you can, someone sitting down with you talking about their situation, you can really purposefully and meaningfully advocate for them.
Correct.
And go to someone that can actually make a decision if you're not able to.
Yeah, that's one of the reasons I was here. When I was the big bank, and that happened, like Mike said, I had a purchase. 48 hours before it's supposed to close. Oh, you cannot close, and I couldn't get a hold of anyone.
Yeah. Yeah, that's no fun, right?
Yeah.
That's not.
And being like a place like North Shore, I've been here 4.5 years. There's customers that come in here. We know who they are now. They come by me. Hey, you did my loan 2-3 years ago. I want to buy a house. It's more of a human contact. They can make their mortgage payment here most of the time, or online.
Yeah. A lot of relationship opportunities.
It's a relationship bank. Yeah.
Well, great. Is there anything else you guys want to talk about? Any that you feel is important about North Shore Bank? I have a couple other questions, but anything else about North Shore Bank that you want to mention?
Yeah, I think we're talking about portfolio. We kind of skipped over one of the big things that we do here. It's a very, very unique product. And in this environment, it's really an important product. We're doing a lot of it. So right now, when people are writing offers, the offers have to be very competitive. As anyone searching for a house knows, or is in the industry knows, people are offering over their contingencies on offers. They're looking for offers without contingencies. One of the contingencies that is a deal killer for everybody would be this, having to sell the house they're currently in. In a buyer's market, you might be able to get away with that, and then but basically, if you don't sell your home, you don't have to buy the home you're buying. So it's not a real solid thing. So people are looking for a home that currently have a home. they want to be able to put an offer in without having to sell their current home. Now, if they can't afford both payments, they typically would not qualify for that. We have a product where we can do a cross-collateralization, where we can use the equity in their existing home as a down payment on the new home without them having to sell that home, or pull a home equity loan or get a second loan or anything else like that. So we use both properties. Then once they buy or build the new home, we also do it on building, so they can have this loan in place for a year. They can have extra as long as they want to. After they sell their current home, then they just pay us a previously agreed amount of the proceeds from the sale of the home. We recast the loan, which means that
recast the new loan.
We'll recast the new loan, which means after a big payment, we'll subtract and then re-amortize it over 359 months, whatever's left on it,
Very nice.
to make their payment affordable.
Yeah.
And then so now what that gives you the ability to do is write an offer without having a home sale contingency, and it makes for a much more competitive offer.
Okay.
And that's kind of unique to us, and we're getting a lot of.
I had an appointment the other day in Mequon that this lady, she's been in her house 30 years, and she's I want to buy a new house, but I don't want to sell.
I don't want to have nowhere to live.
Right.
Right.
And we're getting together next week again. And
That's
I'm going
great.
to explain
Well, that's a
it.
great value for real estate brokers to have a North Shore Bank loan originator in their pocket, right? Because they know they can, write this offer this way.
Yep.
That's great. That's awesome. So, getting on to you guys personally, you've been in this industry for maybe 3 decades. What would you say to someone who's trying to build a career, in banking, or what were some of the keys for you in your longevity? Are there habits? Is there self-improvement things that you guys have done? Is there trainings? I know, Mike, you said mentors.
I'm ready to say self-improvement is you got to believe in yourself. I think is the number one thing.
Now, how do you get that, Claudio?
I like to hang around with people who believe in themselves.
Okay, so it's your circle.
Circle friends, yes.
Yeah.
I like to hang around people who believe in themselves. Discipline is, I think, one of the biggest things. Like Mike said, you got to be ready to take no for an answer.
Yeah.
And
So being able to face rejection.
correct, and brush yourself off.
Yeah.
But I think a lot of it is you got to build contacts
Yeah.
with people. One of the biggest things that I see in this business is always talk to people every day. I spend a lot of time talking to financial advisors, where I go work out. I talk to my coworkers. But always watch what's going on around you. What is the bond market today? What's the market that
So you can have something to talk about. You have something to say,
talk
right?
about. You gotta suck like a sponge. You gotta take
Yeah.
knowledge of
Yeah.
what's going around.
Yeah.
What's the economy doing? What do you see 6 months from now?
Right.
What is the competitor doing that I'm not doing, and vice versa? What I excel in? What am I good at?
Yeah.
I like to spend most of my time spending 90% of the time what I'm good at versus the 10% what I'm not good at. And but again, it's just building relations. And the biggest thing I see in this business with you, somebody coming in, is they make an introduction and they never follow up again. I hear that all the time. Oh yeah, I had a loan officer came in to see me. I never heard from him again.
Follow through.
Yep.
Constantly.
All right. Mike, anything to add to that?
Yeah, I mean, it comes down to organization, really. So you're talking processes. The follow-up is a big thing. So when I'm talking to a loan officer, because I do this myself, and I do it most of the time. Not everybody's perfect on that. It's getting good processes in place to make sure that you're not missing anything, and adhering to those processes. Whether it's imposed on you by the place you're working at, or if you find out that you're missing something, you can develop your own. But it's doing the things that Claudio said, talking to somebody every single day. So I tell every time I use a time block on my calendar. Is what I do. So
That's great.
And every day, for example, pre-approvals are out there for much longer right now. So the pre-approvals that I have, I want to stay in contact with. And the last thing that I want to hear.
So talk about the time block real quick.
Yep.
So what
Going back
what
to
is
that.
what does your time block look like?
I mean, basically, so like the pre-approval, like I said, I don't want anyone to, the answer I don't want to hear is when's the last time that you follow? I follow up every other week or so. No, that's not good enough. So put on your calendar. Here's an hour on Thursday afternoon.
Right.
I'm going to follow up with everybody. That's not negotiable. That's an appointment I made with myself. I'm going to reach out to them by email, phone, whatever's appropriate. And that's just one example of what it is. And if something happens where you have an appointment, then you move that appointment. It doesn't get not done that week. It gets done that week. And if you time block everything and make sure that you're doing the things every day that can do more business, as you drive more business, that's going to help you be successful. You don't want to come to your office and look up at 3 o'clock because you've been working reactively all day and say, wow, I have really nothing done today.
You hadn't done anything important.
Haven't done anything to help drive the business. I worked reactively. I moved some papers around. Something else like
Put
that.
out fires,
Yeah,
drove grandma to the airport.
You've got to keep the focus going, and you've got to find a way to manage your own day. And you should know when you wake up in the morning. You should know what you're doing that day, and if you got to be focused on some system to keep yourself on track.
I once read a book to say the best time, and I do this like Mike does usually, is Tuesdays between 10 to 11:30.
Okay.
Monday mornings you never do that, and Friday
No one
afternoon.
wants to hear from you on Monday morning.
I read it, I forgot the book was.
Yeah.
On Tuesday morning, that's when people start planning the rest of the week and the following week.
Uh-huh.
Friday, if you do it on Wednesday or Thursday or Friday, you just lost 4 days because now you're talking on the next week. But that's when I do it usually Tuesday between 10 and 11:30.
Okay.
Yeah, so it's good habits and stick to them and make sure you're doing that.
Steve's
the
looking for a
follow-up is
house.
huge.
Yeah, hey Steve,
Yeah.
a couple of jokes and move on.
Yeah, the follow-up is huge. A lot of people are not good at it, so you need to have a system for
Right.
follow-up.
Yeah,
a
discipline.
formal system to do it, or you're not going to do it. People think they're going to do it, but they don't.
Yeah, and you've managed a lot of salespeople in your day, and you've seen a lot, Claudio, and you've managed them in your business as well. Sometimes the natural-born salesperson isn't a very good salesperson at all, right? Because they talk too much, and it's the discipline. The introvert or the extrovert both can do good at sales if they follow the process. Don't you find that to be true?
Yeah, did you ever heard of Zig Ziglar?
Yeah, absolutely.
He said the biggest mistake that people do is in sales, they spend 5 minutes talking about themselves to the customer instead of the customer do all the talking. Instead of saying, what can I do for you? Tell me your story. They spend 5 minutes, well, I'm the number one salesman.
Yeah.
And the customer just lost you.
Right. They've tuned you out.
Correct.
That's interesting.
Yeah. Got to listen to the customer first to find out what you're talking about. You might be talking about something that they have absolutely no interest in.
Yeah.
So you just got to make sure that's listening is huge.
Yeah, and that is the thing. Introvert versus extrovert is introvert needs to push themselves maybe a little bit to be a little bit more go-getter-ish or talk at the cookout where you're handing out and telling people what you do and all that. Where the extrovert needs to learn how to shut up a little bit.
Correct.
And do a little bit more listening, and kind of that place in the middle is actually where you have just enough boldness to have a conversation, but yet enough social awareness or
and sometimes it's dissecting the customer too. Sometimes if I don't know the customer, it's like, what do you want me to do for you that another bank cannot do? And I'm trying to build a relationship with them right away, so we kind of match a little bit.
Yep.
And they'll tell you, I came by you, I want to know your bank. They start telling you it's a smaller bank, but it's not always about the rate.
Yeah. Oh no. Absolutely. It's about the relationship, right? And rate is part of the relationship.
Right.
So, can someone get a loan from one of you two all across Wisconsin, or do they have to go to their local bank?
No, they can go to we can loan anywhere.
You guys, you can lend
anywhere.
Okay.
Yeah, we're not geographic.
Okay. Fantastic. How many loan originators are there in North Shore Bank?
14 now.
Okay.
We just
For 44 branches.
Yep. We just hired 2 more last week. So.
Okay.
He's
Fantastic.
doing all the training.
All right. Well, that's great. Well, then they'll be well trained.
Yeah.
Well, guys, I just want to say thank you, Claudio and Mike. I just want to say thanks a lot for introducing us to North Shore Bank and just introducing us to yourselves and talking a little bit about, really, I feel like I'm sitting with 2 guys that have really been through the fire and been tested and have come out the other end of it. So
A little bit burnt, but we can.
Yeah, a little. Yeah, the coattails are smoking, right? But
the grayer hair.
yeah, that's okay.
You guys do a fantastic job, though.
Thank you.
Yes.
I appreciate that. I appreciate that. And I want to thank Candace too. Candace Liebner, our director of Wisconsin, for introducing us to you. You guys are just a great organization. We're proud to be connected with you. So okay, signing off. People, not titles. Thank you very much to Mike and Claudio from North Shore Bank.
Thank you.